right, ladies and gentlemen, thank you so much for joining us today. We are excited to welcome Oliver Velez, inaugural keynote speaker of the First Traders Expo, international best-selling author, and world-renowned trader, advisor, and entrepreneur. Oliver, thanks for being here. The floor is all yours.
Thank you so very much for having me once again. And welcome back, traders. If you were with me for the last few days, the last 2 days here at this amazing money show, there are over 55 speakers here, professionals throughout the industry, and I'm very proud to be invited as one of those professional traders and professional instructors throughout the industry. As mentioned, I was actually the first inaugural keynote speaker to the very first international expo for this industry. And I continue to be recognized by the industry as being one of the most sought after speakers in this space. And of course, I am recognized throughout the United States as being one of the top traders this industry has at this particular time. I spent a good deal of time going over my past, so we're not going to do that today. All right. If you do not know who I am, then that is in the description for this specific presentation. And of course, you can do your own research. I've been in this industry for 33 years, and I've probably trained more traders than almost the entire industry combined over the last 25 years. I currently have over 10,000 traders in over 43 different countries around the world. And today we're going to talk about why short-term oriented traders actually outperform on average your long-term investors. And this is a very interesting topic because a lot of traders believe that they need to make a choice. Many people who enter the financial markets are sort of torn between, do I take a short-term approach, a short-term buy and hold? Do I try to time the market? Or do I listen to the age-old advice that no one can really time the market? I should not attempt to go in and out, that I should just take this incredibly long-term approach, what I call the Rip Van Winkle approach to the markets, where, you know, you take a nap today and wake up 10 years later and hope everything is okay. Well, it is my view that the world has changed too dramatically since those age-old axioms were very, very popularized and very true. I think that as technology has exploded on the scene, the internet and computerization has really sped the world up in such a way where if your trading is not sped up, you're falling behind the 8 ball. The world used to move a lot slower decades ago. In fact, today, the world statistically is a completely different world every 8 months. And if you're not constantly adjusting to those changes, you are going to be left behind. The same thing applies in your trading. Your trading has to take a more active role in order to keep up with the modern day changes that happen much more frequently today than they used to happen in the 1940s, in the 1950s, when these axioms called only buy and hold and ignore actually worked. Well, they work less today. And I'm going to hopefully over the next 30 minutes demonstrate that very clearly to you. Before I do that, I would like you to definitely get over to my YouTube channel. I spend 4 to 6 hours every single day making sure that a piece of valuable content goes out to you 365 days a year. That's right, every single day. We put a lot of time into making sure you are raising your level of market sophistication and your understanding of how markets operate, and more specifically, your ability to exploit the movements of the market. We do this here every single day. So get over to that YouTube channel and make sure you subscribe, hit the bell in the upper right-hand corner and turn notifications on. All right. As I mentioned, I'm going to skip all of the introductory things regarding my past, my history, my books and things of that nature. And I want to jump right into, actually, if I can, I just want to make sure I am sharing my entire screen. What you're looking at right now is my trading platform. And I hope you can see the chart in the left-hand side of, in fact, let me just move that over to make it a bit bigger for you. And I want to touch a little bit upon some of the things I talked to you about over the last several days. Remember, we talked about the concept of space. We talked about the concept of single space, dual space, narrow state, wide state, power bars, and the color game. These are the elements that we talked about. And we delved into how you can put those things together to really have a very, very nice, consistent trading approach to the markets. Now, remember we talked about the fact that you can have this narrow state where your 20 period moving average, the blue line, your 200 period moving average, the red line, and the stock itself, they're relatively close together. This is what we would call a narrow state. But as you can see, the state starts to spread out and the 20 period moving average starts to decline. Your stock is under the 20 is under the 200, and the 20 period moving average is declining. Now that's what we call the picture of power, or what I call the three-finger spread picture of power. Your best trading opportunities, whether you're an investor or a short-term oriented trader, is going to come from a narrow state. Now, the short-term trader is going to trade on a much smaller time frame. What you're looking at is a stock called AMD. It's a 2-minute chart. Every bar represents only 2 minutes of trading. Green bars are 2-minute periods up. Red bars are 2-minute periods down. Now, what we want to do if we're a long-term investor is we want to take this chart and basically make sure we're looking at either a daily chart, and that's AMD on the daily chart. Now, every bar on this chart represents one full day of trading. Now, take a look at the daily chart. Look at the 3 items. You have 3 items, right? The stock, the 20 period moving average, the blue line, and the 200 period moving average, the red line. Now, find the narrow state I spoke about. Find when those 3 items are not wide apart. Find when they are close together. And as you can see in the middle of the chart, all 3 items are close together. This is a daily chart. We're going all the way back to the beginning of October of 2019 when we had that narrow state in AMD. And of course, out of the narrow state, we want to take a long-term investment-like position in the play. And so what are the 2 games we play? Power bars, which we talked about thoroughly over the last couple of days, and the color game. So whenever green surpasses a red, boom. But you must be doing both of these not too far away from the blue 20 period moving average. So if we look very carefully, look, green eliminates this red. Boom. There's play number 1. Okay. And then you can do these as long as we're not too far away from the 20 period moving average. Whenever green surpasses a red, boom. Whenever green surpasses a red, boom, this green surpasses these reds. But when you get too far away from the 20 period moving average, you're susceptible to a pullback. We talked about this. So when you get too far separated from the 20, you're susceptible to a pullback. Whenever you get too far separated from the 20, you're susceptible to a pullback. So here is what makes all the difference in the world between what a short-term oriented trader would do versus a buy and holder. The buy and holder, the traditional long-term investor, gets in here. Let's assume they get in at the same spot. And let's say that trader, that investor gets out here around 50. Okay? Very, very nice multi-month gain. Now, most investors are holding over years and years. Okay? I'm taking a small segment of time and showing you the concept which can be applied over years and years and years as well. When you're going over years instead of months, you want to use the monthly chart. We're using the daily chart. So the daily chart is taking an investment approach over many months. The monthly chart would be taking an investment approach over many years. Your 2 or 5 minute chart is taking a trading in and out perspective. And we're going to talk about all 3. So assuming that the daily chart investor would take their initial position there out of a narrow state, all right? Green surpasses red. but that trader gets out here if they're lucky. Well, if they've been taught by me, as an example. Okay. Well, maybe not. Let's go. Let's look at this. Let's look at this a little bit more carefully here. Okay. So the initial entry is here. And let's say this trader got very lucky and had some training by me and gets out of that position here at 59. So an entry very close to, I don't say close to 25 and out at 59. Not a bad multi-month play. Okay. Now remember, your best plays are going to come from a narrow state. Your sells should come from when the three states or the three items are separated wide apart. So entry, exit, entry, exit. And we want to trade with the flow of the 20-period moving average. Now, so not a bad game, not a bad game. Okay, what is this? A $34 gain. However, here's what the shorter term trader would do with this trade. They would get in at the same spot and get out here. Why? Because of the separation away from the 20. They would save themselves from this drop and then get in on this power bar here. Now, the investor suffers the loss from that drop, and the investor is only even, gets his money back here. But the short-term trader has sold out here and has repositioned his money in the play there. So that now coming back to the original peak is actually a win for the short-term trader instead of a recuperation of profits lost by the investor. So the investor wins an extra amount of profitability in the same play right there. That's extra. That box represents extra. Now we move to, let's say, we move here, okay, the drop, the comeback in on a power green bar. You can come back in under the 20-period moving average as long as you're under the 20-period moving average is fine. At the 20-period moving average is fine. Just a little above the 20-period moving average is fine. This is all fine as long as you have the picture of power. Rising stop, rising 20, those two things over the 200. And then the move away, both traders exits. So the extra amounts here, one, and here are actually more profit than just simply getting in, suffering the declines, and getting out at the same spot. So we would have to take this move upward as the investors move, and we would have to add one on top of the gains and two on top of the gains. And so your in and out trader based on the space concept I've talked to you about over the last two training sessions. If you're using my space concept, you have the ability to outperform the traditional buy and holder. It takes a little bit more work. It takes some extra timing, but these extra gains over a lifetime of market play add up to an incredible fortune. I want you to understand something. Warren Buffett, as we know, is recognized as being one of, if not the most successful investor the world has ever known. But I don't think a lot of people understand that over the past 35 years or more, right, Warren Buffett's average annual gain is about 16%. I want you to think about this. The average gain of the very best long-term investor that the world has ever known, The average annual gain over the past 35, maybe as much as 40 years, look it up. The average Warren Buffett gain is about 15, 16%. Now, traders regularly outperform 15, 16%. And some traders can do that with specific leverage, right? In a day, in a week, in a month. So we're not talking about huge numbers. Where the advantage comes with Warren Buffett is that that's 15, 16% on an ungodly amount of money. We understand that. But I want you to understand that those specific percentages are constantly beat, if not destroyed, by short-term traders. Okay? Now, let's go to how a short-term trader versus that investment mind approach would apply this on a micro time frame. If we go back to AMD, and this is today's activity, okay? Now we're looking at today's activity. This is yesterday's activity. We can start there. Yesterday's activity, we start from a narrow state. Now, once red eliminates green, there's your entry, okay? And this trader would enter, the short-term trader would enter once red eliminates green from a narrow state in the direction of the 20-period moving average. So we're betting to the downside, okay? And once the stock moves away from the 20, the profit taking occurs. Now the trader waits for the move back up and then re-enters the play once again. The game starts again. Red eliminates green here. There's the second entry, okay? We move away from the 20, profit take, okay? Now, we move a little closer. We move a little bit back closer. Once you get that little lift again, now we start the game again. Red eliminates green here. We move away from the 20. Now, look at what's happening here. Your 20 and the 200 are starting to get far apart and your stock is separated. That's the three-finger spread. So we've gone from a narrow state to now a wide state, which means the game is over. Your best opportunities are going to come out of a narrow state into a wide, and the game is over. Many traders make the mistake of pressing their luck and looking for the same odds in a wide state that actually flows from a narrow state. You have to know your states. This becomes a simple game of finding your states, looking at a stock and finding the state, looking at a stock, finding a state. Which direction is the 20 going, up or down out of a narrow state? Now play the color game, play the power game. Take profits away, get back in near. Take profits away, get back in near. Narrow state, right? We begin. Trade with the flow of the 20-period moving average, up or down out of the narrow state, right? Away from the 20, profit taking. Near the 20, enter. Wide apart, game over. Repeat, 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 repeat for a lifetime of profitability. Now, take a look at this. This was yesterday's activity in AMD. If we keep going, now this starts today's activity. Now we're moving from a wide state from yesterday, right? Now look at the wide state. Now, if you were part of my presentations this last couple of days, you know that from these three wide states, we can now play to the upside. So wide, we can now go reverse, right? So my traders would enter reverse perhaps here. Beautiful, solid power bar in the form of that bottoming tail bar, okay? And boom, now we're moving from the wide state. This is today's activity, guys. This is today's activity. We're going from the three items separated to now the three items close together again. So this movement to the upside, you must assume is over. Okay? Now, We're going to play the game back the other way. We're under the moving averages. The 20-period moving average is starting to slope downward. Now, let's take red eliminates green. Boom. Okay. And we keep going. And boom. From wide to narrow, from wide to narrow, back to wide. Look at your three items again, separated again. But if we were to follow this trade out, red eliminates green right there. All right. You're pulling away, look at the space, away from the 20-period moving average, out, coming back in. Red eliminates green, moving away, out. We move back toward the 20. We're coming back in here. Red eliminates green. Boom. We're moving away, out. We drift back a little closer. Red eliminates green. Boom. We move away and out. But your investor approach would be, assuming the entry is the same, is to suffer through all of the movements so that this movement here is just recuperating what was lost instead of it being a gain. This movement here, sorry about that. This movement here is a gain for the short-term trader, an extra gain, but it's simply a recuperation for the investor approach, a recuperation of what they lost. So this is lost profits for the investor, the holder. And right here, this drop is no longer a gain. It's just getting what was lost back. Whereas it for the short-term trader, exit, entry, the entry to revisit where it was before is actually an extra gain. And so these extra gains over a lifetime of play, 1, 2, creates an additional fortune. And this I showed you on the daily chart. I've showed you on the micro trading chart, the 2-minute chart. So yes, there is an investment approach that you can apply to any time frame. But I want you to understand, I teach my traders to not make a choice between these. I teach my traders to be 3-dimensional traders. So I want them holding a portion of their play. So let's say, for instance, they do 3 lots. Okay. They're going to sell 2 lots, keep 1. They're going to put those 2 lots back on here. Okay. Then they're going to sell 2 lots. They're going to put those 2 lots back on there. They're going to sell 2 lots. They're going to put those 2 lots back on here. It's a narrow range play here. Beautiful. They're going to sell all lots once you've got the 3-finger spread. No more keeping anything. We keep things, we keep some in the play as we're going through the movement to get to the 3-finger spread. So if we think of every movement into 3 parts, think of it this way: narrow, wide, and then the middle. So we want to ride the middle. This is the entry. This is the exit. But we want to ride that middle. How do we ride it? We keep some in and do the in and out with the other portion. We keep some in, so we don't choose between the investor approach or the short-term approach, we combine them into this amazing, wonderful, complete system where we get the benefits of them all. So sometimes your timing might be off in and out, but you still have that part that's still in there riding the whole thing. Sometimes you don't get the pullback that you expected after away. Boom, I took profits away. I'm waiting for the pullback, but then it drops before you can add, but you still have some in. Okay. So this combined approach, knowing why short-term traders actually on average outperform the buy and holder. So now the buy and holder can incorporate the moves of the short-term trader without abandoning his or her approach on the long-term buy and hold approach, and vice versa. You don't have to marry, I'm just a short-term trader. You can start incorporating some of the benefits that the long-term hold approach offers you. And when we put these things together, it's amazing. So we even go further, and we're playing this strategy on the monthly chart. Now look at the monthly chart of AMD. Monthly. All right. You know you're in a narrow state here. Look at everything's together. Look at the wide state here. We go from wide. This all the way back in 06, right? To narrow. Now we're narrow. This is all narrow. Now we move back to wide again. I can show you this thousands of times all day long, over and over and over again. And notice, look, you're away from the 20 profits, you come near the 20 again. Away from the 20 profits, you come near the 20 again. Away out of everything. That's the really long-term approach. Now, if you want to take, that's the multi-year approach. The multi-month approach, you're going to be here. All right, narrow. And we've got several months of a gain. All right, here you want to be out of all, 3-finger spread. And then we've got the micro approach, right? Narrow to wide. And notice after that triple wide all day, the market is still moving today, as you can see. We're not finished yet. There has been virtually no further real deterioration in the stock. Now, this is quite amazing, guys. All right. I want you understanding these concepts I'm sharing with you very thoroughly. They're simple, but they're supposed to be simple. They're not easy. I won't say easy, but they're simple and they're powerful. If you can't explain your approach to a 12-year-old and have the 12-year-old understand, you are overcomplicating this game. The markets have 3 movements: up, down, sideways, up, down, sideways. That's it. That's not a complex vehicle. We make this game complex. We bring the complexity to the game. We bring our lack of discipline. We bring our inability to follow simple rules. We bring all the problems. The market doesn't have the problems. Look, the human body is a complex mechanism. There are billions of processes firing off on my body, your body, every single second of your existence. But the market has only 3 things: up, down, sideways, up, down, sideways. And just a few small handful of very simple but powerful concepts can have you on the right side of this mechanism far more often than you probably think or know today. All right, I've been doing this for the last 33 years of my life. Over the past 26 years, I've taught more traders throughout the world: professional traders, hedge fund traders, institutional traders. For 12 years, Wall Street sent me their very top traders in the industry to train for a lot of money. All right. But today, I decided a number of years ago that I was going to stop my focus on institutional professional traders and bring Wall Street, my professional Wall Street experience and expertise to bring Wall Street to Main Street. So today I travel all over the world recruiting traders into my program. I want to show you this really fast. My time is almost up here. Let's do this. So let me show you this very quickly here. My most popular program is called the Self-Start program. Now, this is because you take it at your own pace. All right. You get give me 2 days and I will teach you every single tactic, every single strategy, every single money management, everything you need, every tool that you need to do this professionally and the correct way. You get the right technology, the right training. In addition to that, you will be trained by some of the best traders in this country every single day of your life. You will never be left alone. Every single moment, every single minute, every single time you have a question, you'll take their trades, you'll take your trades, you'll do reviews. We have daily breakout sessions. We are nurturing our traders to become truly super professional traders. And that training never stops. Now that program is $1,700. If you wanted to add the live trading camp, which is with me, where I deal with you to learn my specialty. I became popular on Wall Street as one of the top traders that was able to become profitable the most in the first 20 minutes of the trading day. That's where my fame comes from. That's where my popularity comes from. That's what led me to start my own firm in 1994, which became one of the top trading organizations in the world. All right. Today, we are 10,000 traders strong. And if you want to add that, the entire program is $3,000. Now, look, you can lose this in a day. You can lose this in a week, a month, in a trade. This is for a lifetime of training. Your training never stops. There's no expiration date for this. All right. Now, look, there are some discounts here. I'd like to give you the entire package for $2,000 or $1,500 for the Self-Start. Now, this program includes full funding by me. I want you to understand that. I believe that traders do better without trading their capital. You see, you're not as brilliant with your capital, but you're more brilliant with my capital. You're not as smart with your capital. You're smarter with my capital. You're not as disciplined with your capital. You're more disciplined with my capital. This is one of the secrets of Wall Street. No professional trader uses their own money. Not even the billionaires use their own money. All right. So I want to give you the proper amount of capital. I want to start you off with $50,000. We will share the profits. I will take 100% of the losses. If I fail to turn you profitable, then I'm the one that loses. All right. You'll get one of the best educations this industry has to offer by a 33-year-old veteran, and we will never, ever stop investing and pumping in you as long as you have a single dollar of my capital. This keeps us honest. I want you to understand this. This keeps us honest. If I don't pour everything I know into you, if I don't do my job, I lose my capital because my capital is on the line. I want to do this for you. Let's take the professional route for this. A lot of people say, Oliver, why are you doing this? Why are you traveling around the world recruiting traders? Well, it makes sense, right? I can't be everywhere the color game is. If I'm playing the color game in Microsoft, I need you playing the color game in Twitter, someone else playing the color game in Facebook, another trader taking the color game in Apple, another one in Baba, another one in Starbucks. I can't be at every single spot. So by spreading my capital amongst other traders that actually see the markets exactly like me, giving them my capital, we capture all of the opportunities, all of the narrow states and all of the stocks, all of the wide states and all of the stocks, all of the color reversals, all of the power bars, all of the profit-taking opportunities. And so in this way, there's power in numbers. Traders, I want to thank you very much for attending the Money Show. This is one of the greatest organizations as it comes to bringing all of the professionals together. There is no other organization that does this better than the Money Show. They've been at this for decades, the same way I've been at trading for decades. And I want to give a special thank you to the organizers of the Money Show for once again inviting me, for being loyal, in their appreciation for all of the professionals in this industry. I am honored to have been the very first person chosen to lead the industry as the keynote speaker in the first show in 1999. And I'm also honored to be the keynote speaker again at this particular show some 20 odd years later. But thank you very much for attending. I hope that you got something extremely valuable from our talk today.
Thank you,
Trade well.
Oliver.